So we are still on the time session. So I said we have three main sessions: the AMD, which is what the accumulation, manipulation, and distribution. So we have covered how to trade the AMD, how to trade the AMD. Okay, so to add to the New York session, how to trade both the AMD as in how you are seeing it over here. Let me give you guys some tip. So sometimes first the London session, it takes out the buy side liquidity. Are you getting it? So the London session, it takes out the buy side liquidity. That's if price first break to if price breaks to this outside. So you can see over here that what the London session has taken out this buy side liquidity. This is the London open. I get it. So it has taken out the buy side liquidity of what the Asia range. Then sometimes it would drop and come and take out the sell side liquidity of the same what Asia session again. So we have it being the manipulation session is taking out both what the buy side and the sell side liquidity of this Asia range. Then when the New York session open, it will take out the buy side liquidity of this London session. Are you guys getting it? So over here, you can see price has created what equal highs over here. So it becomes what a buy side liquidity. So when New York open, since it's just a continuation of the trend or the distribution, it will what starts forming high highs and lows until it takes out this buy side liquidity of the London session. Then it's continue or it reverses to the opposite side for another what AMD mark up again. That's the restart of what the accumulation again, and the other session continue again. How you guys getting it? Okay, so let's continue. We have how to trade it. So how to trade the AMD. All right. So how to trade the AMD. While here we'll be tackling the AMD and general. So we'll be explaining the accumulation, the manipulation, and the distribution for you to understand. So the accumulation of position generally what occurs during the Asia session. I get it. So whenever the Asia session opens, you have to know that what price is just what doing accumulation is what creating liquidity for the next session. All right. So during the Asia session, the accumulation is characterized by being a consolidation, but it may not be what the Asia session. Okay. And we'll move on to the manipulation session. So the manipulation session, as we said, is for what the London session. So the manipulation session, it usually occurs at the opening of the London what session. I get in the manipulation, it usually occurs at the opening of the London session. Sometimes it can be what the New York open. I get in it. The manipulation consists of taking the price to the opposite side of the true direction of the rest of the day. So if the main direction is bullish, then when the manipulation session opens, you can see it taking price towards the opposite side. I get in it, and you see price what maybe on the 1 hour time frame. You see on the 1 hour time frame price is bearish, but on the bigger time frame, that's on the 4 hour time frame, price is what price is bullish. I get in it. All right. Then unless the New York session open again before we see price what continuing a trend again. That's why we have a complex pullback or complex trend we have the main trend as maybe the pro trend. I getting it. So we are having a trend within a trend. So we have the 1 hour trend, we have a 4 hour trend. I getting it. That's why mostly people say market structure is king. If you understand how to trade very well, then you have to first understand market structure very well. All right, so when it comes to the distribution, this occurs when market makers liquidate, that's what their position. Liquidation simply means what? When they exit their position. I get it. So when they exit their position, that's for what? The distribution. That's why sometimes you see price tapping, mitigating order block before it's moving to the actual direction. And see, it simply means price has what mitigated or exit another or their position in the market. The bounce has exited their position in the market. Yeah, tap.
Okay.
Okay. So types of AMD. We have types of AMD. I don't need to explain the AMD again. So we have the bullish AMD, and the bearish AMD, which I have explained already. So these are the two types of AMDs that we have. We have a bullish AMD and the bearish AMD. Okay, so I've already explained it over here. It's for the bullish AMD. So let's use this as a bullish AMD. And let's have a bearish AMD. Well, let me go over all again. So we have the accumulation session. We use blue. And we have price. So over here, I've explained what the reason why this move need to come to the downside is simply to take liquidity, the sell side liquidity, where you can see price created a lot of sell side liquidity over there. So if you check your left hand side, so you should always check the last movement before the Asia session consolidation. You can see there will be an order block over here. If there's no order block, then there should be inefficiency. So price will basically take out this liquidity, then mitigate or fill an inefficiency over here before it's continuing. So we have this is the London session, this is the Asia session. So accumulation, manipulation, then we have the distribution. So what sometimes happens is you can see price taking out this London high. See price taking out the London high. So New York session takes out the London high, and what makes a retracement. So over here you can see we have a break of structure over here, and price will also start moving. So we have this over here as our New York session. Right. So you can see that price has taken out this London high over here, and came back to fill inefficiency, went up again, created this liquidity over here, left order block over here, price came back to mitigate this order block. The price starts continuing its original trend. You can see right here from the beginning, this was a bullish AMD. Is a bullish AMD. So the bearish AMD is just what the opposite of this. So this was the bearish AMD. See price forming lows in the market. We have this equal highs. So when markets open, price went up to take out what the buy side liquidity of this Asia session and what's mitigating another block over here. And after that, it came to the New York session open. So New York session open from here. It came to take out the low of this London session. It came to take the low of this London session. And it started moving to the downside, its original trend. So you can see that it's always the London session serves as what as the manipulation session. You can see only this London session is having a buy and a selling, as in what it's manipulating the swing traders in the market, while the day traders and the scalpers are looking from this pullbacks in the market. I get it. All right, so this is the types of what AMD we have. We have the bullish AMD and the bearish AMD as well. Okay, and always remember that what the Asia session or the accumulation session, it has a 10 pips to 40 pips range. So 10 to 40 pips range. I get in it. All right, it has 10 to 40 pips range. So we have this manipulation retracement. This is the manipulation retracement. Then started forming a high for the distribution session. So how to trade? You're still on how to trade the AMD. So the accumulation, the price will be ranging. So how to identify it without using the session box? So the accumulation, the price will be ranging. And the manipulation, the price will break the range direction to trap traders. Are you getting it? So that's the idea or the concept of what price taking out the buy side liquidity or the sell side liquidity. It needs to do what? To break out of the range to what? To trap traders because of what? Liquidity. So why does that happen? It's simply what? Because of liquidity. That's why price needs to what? Break out of the range or the accumulation box to trap traders due to what? Because of liquidity. Okay, so the distribution price will go against the manipulation movement, right? So price will go against the manipulation movement. And here we look to, let's say if during the manipulation price keeps selling, then during the distribution we look to the opposite way, which is what? Which is buying or going long. I get it. So we have some simple setups. We have some simple setups. We trade. Have some simple setups. So we have a simple order block. Simple OB. Stop hand plus break of structure plus order block. So this what makes up the simple OB. So this is a simple OB. This is a simple OB setup. And two is what we have, the SMS plus break of structure plus order block. So these are the two what simple OBs that we have. So basically we have two simple OBs that we trade. All right, so this is it. We have stop hands plus break of structure plus order block. And we have the swing market shift plus order block plus plus break of structure plus order block. So let's have example over here. So let's say we had this as our okay, we have this as our London session, which is our manipulation session. So price created this order block over here, and what breaks out of this order block comes down to tap this order block and go up. Let's play. We have this. Stop point, created order block structure. We have break of structure over here and price trading back to mitigate this order block. Price movement to the downside. Next one is we have this simple. So as the price came to tap on a bigger time frame order block over here, then you see price failing to create new low. So we have what a swing and market shift. We have a swing and market shift, and what price started and price broke what structure. We have this break of structure over here. And this break of structure. And price trading back to do what? To mitigate this order block over. Right. So this becomes what? Your swing market shift, which is the SMS. Just SMS. Then we have this break of structure over here. BOS up. And we have what the last one is what order block. So OB over here. So OB over here. So this was a simple setup, a simple order block setup over here. A simple order block setup. So we have what SMS, a swing market shift. This one, break of structure, price created this liquidity inducement over here, went up, came down to do what? Mitigate this order block and straight to the outside. So this one, a simple pattern setup. Then we have what the stop hands break of structure plus order block. So we have this what price breaking this high, equal highs over here. Then we had this what stop hands candle. And this stop hands candle formed another block over here. And we had what a break. So for this what we have this stop hands this as stop month SH. I have this other block over here. Other block, we have what this brick of structure over there. A beautiful one. This also nice setup, good for price to come and mitigate and good to go. All right, guys. So this is what the simple OB setup, which is two. The first one is what the stop and plus what break of structure plus OB. This what a setup, simple setups, and the other one is what this one also. So this also what setup, how to identify a setup or how to look for a setup to trade. You can look for what stop and identify a stop and plus break of structure plus what other block valid one. So we have 1, 2, 3 confirmation check. We have 1, 2, 3 check. You are good to go. If first you just have to identify the direction first, then you know what to do next. Okay, so let me quickly add up, then we'll call it a night. All right. So time for entries. Time for entries. Okay, so time for entries. All right, so the most important entry time is always 10 minutes before a session open or 10 minutes after session opens. Right, guys, you're 10 minutes before a session open or 10 minutes after a session open. So example, 10 minutes before London session open or what 10 minutes after London session opens. So this are the two what this is how to what enter a trade. This is how to enter a trade using what the sessions as your, let's say if you are trading a London session, if you want to the best time frame, the best time to enter a trade is what is 10 minutes after and 10 minutes before the session opens. Okay, so let me give you guys some individual algo tips. So we have EU, Euro USD. So EU premium reversal. $80. And that's what we are using UTC -5. That's the time zone that we are using. Are you guys getting it? So this is the premium reversal time. So this is the premium reversal time for EU. The same applies to what the GJ and US 30. So US 30 also. With US 30, it works very, very well with this premium reversal time from 9:30. So the direction of the 9:30 is the main direction. That's around 2:30 GMT over here in Ghana. That's 2:30 GMT. So these are the premium price, the premium time for reversal on USD and US 30. Okay. So we will not take in much. And we'll continue this later. Our next session will be on the chart, just practicals on the chart, since you have already done with the theory and the chart aspect. Tomorrow we'll be going live on the chart to apply some of this on the chart. Okay, guys. So if you have any question, you can ask me. I'll address it. Don't move on. Hey guys, if you have any question, let me know quickly then. I'll address it, then we'll move on. All right, so let me we have less than 5 minutes. Let me add to it. So the landing session box uses 1 hour to create. I get it uses 1 hour to create. That's from what 3 o'clock a.m. to 4 o'clock a.m. It uses 1 hour to create 3 to 4 a.m. Entry can be between 6:30 a.m. That's if you are trading the landing session. That's the 6:30 a.m. to 7 a.m. So by 6:30 a.m. to 7 a.m. that's the UTC time, not GMT, UTC time. You should have an entry. That's the best time frame or the kill zone. Then your take profit should at least get out of the market around 9 o'clock. Latest by 9:15, you should be out of the trade. That's for the landing session. You should be out of the landing trade. Then you start looking forward the price action, the breakout of what the New York box. Then you start looking forward entry around what that's around 9:30 to 10. Sorry, 9:30 to 11. Latest by 11 should be in the New York session trade. So that's the premium time. All right, so when it comes to the New York session, the box also uses 1 hour to create. That's from 9 o'clock to 10 a.m. 9 o'clock to 10 a.m. So sometimes you just have to wait for breakout of the box to take out the low of the open session. Right, and so what I basically mean, if we have this as our New York session, then you have maybe this. You just have to wait for breakout of this box and look for entry somewhere here. Maybe sometimes price creating efficiency here, then continue. Sometimes price creates order block here and drops. So around what's latest by 9:30 should be sometimes to before price will get here and start dropping. It's exactly 9:30. Then price would start dropping to the downside. Then your second entry. So your first entry can be what 9:25 or 9:30, and your second entry can be around 11 a.m. So 11 a.m. you start having what some pullback, then you have what another what entry. That's for the sell setups. So let's say if you want to take a 1 minute trade entry, always wait for, you have to identify a structure on the 5 minutes. So you first wait for the 5 minutes structure or the candle to change to uh, bearish. When you move to the 1 minute time frame, you should change to a bearish candle. Let's say if you're looking for a sell before you start looking for structure on the 1 minute or so. All right, guys. So this is it for tonight. I'll upload a video and you guys will practice this on your chat. All right, so it's spread time already. That's why we're having this huge gaps in the market spread time. So basically, you can see we had this other block over here, price broke, so price need